After 10 years of waiting, the SEC finally approved 11 spot Bitcoin ETFs in 2024. In this video, I will cover all you need to know on how to choose the best Bitcoin ETF. Before spot Bitcoin ETFs appeared, only Bitcoin futures ETFs were available for investing. Sadly, they were very expensive and subject to time decay from derivatives. For instance, take a look at Grayscale Bitcoin Trust or GBTC. The fund used Bitcoin futures before 2024. We see that it had major deviations from the Bitcoin price. While all 11 Bitcoin ETFs hold the same asset, that is Bitcoin, not all of them are created equal. There are 4 factors that any investor should consider. First is expense ratio. If you are a buy and hold investor, focusing on fees is crucial. Here's a table that summarizes expense ratios for each Bitcoin ETF. I show expense ratio before and after waivers in parentheses. Because these funds are still building momentum, they provide temporary incentive for investors. Many of them waive fees with limitations. These include a certain period of time or until they reach asset thresholds. Franklin Bitcoin ETF or EZBC offers the lowest expense ratio of 0.19% before waiver. 7 other Bitcoin ETFs charge expense ratios within 0.1% deviation. Moreover, many funds waived their fees. For instance, Franklin ETF waived fees to 0% until August 2, 2024, or before the fund reaches $10 billion in assets. Not all Bitcoin funds provide such waivers, of course. The most expensive fund is the incumbent Grayscale Bitcoin Trust, or GBTC. Before 2024, GBTC charged 2%, but with the SEC approval, Grayscale converted this fund to spot Bitcoin ETF in January and lowered its fees to 1.5%. For now, it's one of the largest funds with about 29 billion in assets. But most of these assets are legacy money that flowed in when no spot Bitcoin ETFs were available. So things may change fast for Grayscale with competition. Very likely, GBTC will have to lower again its fees to match competition. Liquidity is another consideration. It is especially important for actively trading investors. By liquidity, I mean how fast you can trade ETF shares without material impact on prices. You want to buy a Bitcoin ETF with a relatively large trading volume and low bid-ask spreads. One metric to focus on is the bid-ask spread percent. You calculate it as the dollar spread, ask minus bid, divided by the average of bid and ask. The lower the spread percent is, the better price you will get. ETFs must disclose a 30-day median bid-ask spread percent on their websites. Of course, only a few trading days passed by since Bitcoin ETFs got approved. Still, I compiled this metric across these 11 funds. As we see, the spread percent is quite tight for most of them. However, iShares has a noticeable lead. Grayscale ETF has the worst spread percent of them all, but this reflects bid-ask spreads before its conversion to spot Bitcoin fund, so most likely its spreads will improve going forward. Another metric that can signal high liquidity is trading volume and dollar volume. The dollar volume is a product of a share price and a trading volume. Ideally, we should use averages for the past several months. Looking at the table, we see that Grayscale leads the pack, but again, this probably reflects its legacy. Other notable funds with large volumes include iShares, Fidelity, and Bitwise. Also, you can assess Bitcoin ETFs by their net asset sizes. The bigger the size is, the more likelihood that a fund will stick around. Sadly, it's too early to assess this metric. While I compiled net asset positions for each Bitcoin ETF, these numbers are in flux. Grayscale aside, we see that Bitwise, iShares, and VanEck have a good start. The final factor in settling on the best Bitcoin ETF is trading cost that fund incurs. You may know that a typical ETF creates shares through in-kind transactions. This means that an ETF itself is not responsible for trading expenses. Another intermediary, usually a broker-dealer, assembles underlying securities, Bitcoin in our case, on behalf of ETFs. Later, this broker-dealer exchanges these securities for ETF shares. Things are different with Bitcoin ETFs. The funds are responsible for posting cash and trading Bitcoin when ETF shares are created or redeemed. This leaves the fund and its investors responsible for any trading costs. Thus, skill and size of a fund manager becomes very important. Most of the Bitcoin funds are managed by large financial institutions. The smallest issuer of them all is Valkyrie. Valkyrie manages 2 more crypto-related funds. Recently, CoinShare International announced an acquisition of Valkyrie. CoinShare is a big crypto player in Europe and manages $4.5 billion in various crypto-related assets. So, where does all this leave us? What is the best Bitcoin ETF? Based on expense ratios, size, and liquidity, Bitwise Bitcoin ETF or BITB looks like a wise choice. But it is very likely that iShares and Fidelity funds will catch up too. Although they charge higher fees, BlackRock and Fidelity stand behind them. I can see how they can grow to large sizes using their established customer bases. This alone will ensure their liquidity and popularity. Conversely, we have Franklin Bitcoin ETF with the lowest expense ratio, but so far it remains to be seen if Franklin will be able to pull off asset growth. So this is something to watch for. As for Grayscale ETF, its expense ratio is too high, especially for a long-term investor. True, it has the highest asset size and trading volumes, but this is changing. That is it for this video. I hope you learned something today. Please give it a like or dislike if you disagree, and leave me a comment why. Thank you for watching.